when expectations about something are very high, like you look now at the Magnificent Seven stocks, Meta and Google and notably Nvidia and Tesla, and the expectations are very high for future profit growth, when a small mistake happens, when a small disappointment hits, the reaction is huge on the downside. Whereas if you look at neglected sectors, say you look at today real estate in Hong Kong, China, you look at Chinese stocks, you look at European stocks, although I have to say in the last 6 months, some of them have gone up a lot, so they're not as attractive. But in general, you look at markets that are neglected and depressed, then when something goes wrong, the downside is usually not very high. Frequently on bad news, stocks start to move up again. So I'm interested to look at markets where expectations are very low. Now we take, say, treasury bonds. The negative sentiment about treasuries has never been this high for the last 30 years. So everybody is bearish about bonds, everybody is short bonds. It doesn't mean that they will go up, that you will make money. But I think that maybe the negative sentiment is overdone and that we could get bounce in treasuries because interest rates come down due to economic weakness in the US. My view is that the US economy is far weaker than the government is saying. I tend to believe that dividends can be cut, yes, but usually stocks with a high dividend are more defensive than stocks that don't pay anything at all. And if a stock pays out the 5% dividend, maybe they'll cut it to 2%, but there's still some dividend. So I like, in general, dividend-paying stocks. Number two, as I said, in emerging markets, we have some markets that are high and expensive, like India, and it's likely to decline. But we have other markets that are very cheap. A long time ago, I bought Bank of Cyprus, I bought Bank of Georgia, and I bought not long ago Bank Halyk in Kazakhstan. I don't feel comfortable with anything as an investor. You're always on your edge that something can go wrong, and I think a lot of things will go wrong, especially with the tariffs of Trump. But these stocks have a defensive character, whereas highly priced stocks with a high PE and no dividends have a high volatility factor. I would have voted for Mr. Trump in 2016 and again now. But the fact is, he is a very volatile person who takes decisions without having analyzed the situation carefully. I think a lot of his decisions will backfire. Now, don't misunderstand me. I think Zelensky is a horrible person. He's a user of people, but to be fair to him, he's been supported by the Europeans and the Americans until now, amidst a lot of corruption. But who wouldn't do as he does? Take the money when he comes. If you can pocket in $1 billion and give 100,000 back to some stupid US government official, then you do it. That's what he did. And the whole situation creates an environment of great uncertainty, because someone can walk into Mr. Trump's office and upset him, and he kicks him out essentially, or someone can walk into Trump's office and tell him something, and Trump finds this a good idea and does it. Then the next day another guy comes in and says, no, it's a horrible idea for these reasons. Then he reverses the decision. That is, for an investor, a major problem. And I think you will see a lot of volatility in markets. Trump is a step in the right direction to reduce the power of the socialists. Socialism didn't work, period. And people were depressed under socialism and their standards of living very poor. But the Western people, especially the rich kids that have wealthy parents, they grew up, they don't know that. They've never seen the disaster that socialism brought about in Eastern Europe, in China, in Russia, and so on. So they're voting for socialists But now I think and I hope the mood is changing somewhat, that young people realize maybe after all it's better to be more conservative and vote for the AfD in Germany and equally in France and so forth. So we're moving probably in the right direction. That's what the stock market is saying. I mean, the German stock market has gone bananas in the last few days. We have governments, they have deficits. The deficits arise because they spend too much and they don't collect enough tax. So you have a fiscal deficit, and the tax is the rate of inflation that you get from that action. Now, the deficits lead to more inflation if they are financed by money printing. And I think if the Europeans can move to somewhat reduce these deficits and cut government spending, then the outlook will be reasonably good. But once you tell people, look, I give you 1,000 euros a month for each child you have. When you retire at 65, I give you 2,000 euros a month, and so forth. How are you going to tell these people, I'm going to cut this by 50% or so in a society? Once you give out something, it's very difficult to take it back. My view is the best is to do as little as you can in a society, that people assume own responsibility. You understand? The first humans, the animals, they don't have social security. They look after themselves. They're sick, they're going to die. That's the way it is.
Yeah.
They're hungry, they have to go hunting. Nobody is handing them the food. And so my view is we've moved into a society that is a bunch of entitled people. They think the government should do this, the government should do that. Yes, it's all possible. But then you have at the end the socialist system where the government does this and the government does that, but the government forces you to do this and that also. I believe the current financial system is not sustainable in the long run. Now, is it sustainable for another 5 years? Yeah, maybe they can inflate, and then the inflation rate goes to 20% and 50%. It's all possible. But one day the hour of truth comes. Now, gold and other physical assets like silver and platinum and say real estate, you cannot multiply or increase the supply at the same rate. Then you can increase the supply of paper money. So the paper money will continue to go down against the physical commodity or physical asset.
Yeah.
I print money. So in order to buy an ounce of gold, which is constant basically, the ounce, I need to pay more and more paper money. So it means, of course, I want to have some assets in gold and silver. Number two observation is this. Over the last 20 years, an enormous amount of wealth has been created. You look at the list of billionaires. In 1980, there were 7 billionaires in the world. Maybe there were 10 or 12 because they are drug cartels and so on, but basically very few. Now you have thousands of billionaires. And a billion is not what it used to be. All these people, and my observation, I'm a financial advisor. I have a lot of extremely wealthy people who are readers of mine. If they have 3% of the money in gold, is about all they have. Then they have a billion or say 100 million. They may have 10 million in gold. But I see very few people who say have 100 million and they have 30% in gold. And there are many things that happen in transition times. I give you an example. In year 2000, the tech stocks peaked out. And in 1973, the Nifty 50 peaked out. And in 1989, the Japanese market peaked out. Japan in 89 is more than 50% of global stock market capitalization. In 73, the Nifty 50 broke down. In 2000, tech broke down and it dragged down everything, everywhere. In 1989, Japan went down, but other markets in the world went up. I think this is a possibility in the present situation that the Magnificent Seven will start to go down massively and the money will flow into other sectors. That's why I said I would invest in other sectors. if in the US they suddenly discover that they have very little gold, as I suspect. But if they discover that, they'll buy it, yes. In any event, discussion is this. Is gold in short supply or is gold over-owned? And to that question, I want to answer with very great conviction. Compared to the monetary assets in the world, gold is a very small percentage. In other words, the percentage of monetary reserves that is held in gold has diminished over the last 50 years meaningfully. And as a result of that, I think the price will be relatively stable or go up. But there are other commodities that are probably cheaper than gold. Platinum, wheat, corn, soybeans. The last 2 years, suddenly cocoa went ballistic. So this is the viciousness of price inflation. It's not that all prices in the system rise evenly. No, they go like this and then like that and everywhere. And that makes it very difficult for the small investor to make money. I think BRICS is an expression that the majority of people in the world and the majority of governments in the world, they have enough or had enough with the neo-colonial system of Western countries, where the colonial system has been disbanded. I mean, countries have become independent and so forth, but they're still being influenced and run by the Western imperialistic countries, notably represented by the US, the UK, France, and so forth. So these countries, China, India, and Brazil, Indonesia, that are very population rich, they say, okay, we don't want to be kind of, told what to do. We have our own interests. And so they formed, as opposed to the UN and these organizations, like the World Bank and so on, they formed their own organization. So it's less about BRICS than about the rejection of the United Nations and the EU and the NATO and all these institutions that are basically ruled by Western nations. Given that stocks are relatively low in China and especially in Hong Kong, I would take a bet and invest some money in Chinese and Hong Kong shares. Throughout my life, my largest holding has been gold, physical. And I also own shares in the various portfolios that I look after. But you have to acknowledge that gold miners have performed miserably. So I have them on the list of stocks that are neglected and could go up substantially. But equally, the gold price is no longer as cheap as it was a year ago. It's up 30%. And the gold shares are not likely to move up when the gold price goes down. So I'm a little bit cautious and would not recommend an overweight in gold shares since they performed so poorly.